Hello traders, welcome to my YouTube channel. So in this video I'm going to show you how to identify the ICT fair value gap. Okay, so this is what ICT has been teaching on his YouTube mentorship 2022, and currently that's my trading style. I trade fair value gaps, and I basically want to share with you what I've learned so far. So this I'll be doing a series of lessons for you guys, for you to know where I have reached and how I trade the style. Okay, so I'll be starting today with how to identify your fair value gaps. That's the FVG. Okay, so the FVG is a 3 candle pattern where we have one candle coming down, the second candle goes down, and the third candle goes down, leaving a space between the low of this wick and then the high of this wick. Okay, so taking the low of this wick, let me mark that. Okay, taking the low of this wick and then taking the high of this wick. Okay, taking the low of this wick and the high of this wick, this will be your what? Your fair value gap. Okay, so there's your fair value gap. Okay, and then these areas are like magnets to price. Okay, they are like magnets to price. Whenever price is going in a specific direction, it creates this kind of price. It will normally come back to fill it before it will continue going down. Okay, or if price is going down like this, it may be coming down to fill something like this on the left side of the chart. Okay, so these areas, like, they are like magnet to price. Let's see how we can identify these fair value gaps on the price. Okay, so we have one beautiful fair value gap here on the weekly time frame. Okay, you see this candle, and this candle. You see a gap between this wick low and then this wick's high. Okay, so let me mark both, this wick's low and then this wick's high, and that's your fair value gap. Okay, so you can label this fair value gap. This is on the weekly time frame, so fair value gap on the weekly. Okay, there are going to be many of it, so if you are going to mark any gap on a time frame, you should label what kind of time frame you're looking at and the gap you're looking at. So you see how, though we're in a downtrend, price came all the way from here to fill this gap. Okay, and I think from next week we may anticipate some downtrend. Okay, so there are a lot of these gaps, a lot. We have one here, this candle's high, to this candle's low, though this candle don't have a low and don't have a wick, sorry. So the closing price, so this is a gap. You see how price came back to it to fill it. Fair value gap weekly. Okay, so these areas, they are very strong point of interest that price reacts from. Okay, there are POIs that are very strong that price reacts from. Okay, so whenever we determine our direction, we want to be trading from fair value gaps that are in line with our trend. Okay, you see this candle is low, and then this candle's high. That's a very beautiful gap. Okay, and you can see price came into it and reacted from it twice. It came into it here and sold. It came into it again and sold. Okay, a very strong area of interest, right? So that's how you mark your fair value gaps. That's how you mark your fair value gaps. This lesson is not going to be long. It's just basically to show you how to map your fair value gaps. Okay, and as I said, you mark your fair value gaps that are in line with your trend. It's very important. You can see that there is a weekly chart, and overall we are in a downtrend. Okay, overall we are in a downtrend because you are making higher highs, lower highs and lower lows. Okay, very good. So you're looking for sales, then you can see that whenever we make a new low, we break structure, we form a swing low. Okay, so after breaking structure like this, on that time frame that you are looking at, if you see a swing low being formed, a swing low is a 3-candle pattern as well, where you have the lowest point, we have one candle on the left which is higher, the low of it is higher, one candle on the right which the low of it is higher. It makes this a swing low. Okay, it means price is going to pull back. Where is it going to pull back to? It's going to pull back to what? An imbalance. An imbalance, or equal high or equal low. Probably on the lower time frame there are equal highs, equal low somewhere here. Price is going to take it, or it will come to the imbalance before selling. Okay, so here we break structure again to the downside. This is on the weekly, right? And see what it forms after breaking structure. A swing low, a 3-candle pattern, this low, which is lower than this candle, also lower than this candle, right? As soon as this 3-candle forms, you anticipate a bullish price into this fair value gap. Okay, any fair value gap that is in premium, and then after it reaches here, you look for sales from a daily time frame or 4-hour time frame, a breakup structure there to look for sales. Okay, so this is what this lesson is about. As I say, it's not gonna be long. You should know your direction. You should know your areas or points of interest. That's your fair value gap. Okay, fair value gap. That's all I trade currently. I don't use other blocks as much. I don't use other blocks as much. I trade specifically fair value gaps. That's all I look at. Okay, so whenever the week comes to an end, I come to the weekly time frame and do my analysis. I identify my order flow. As I identify my order flow, I mark my areas of interest where I think price will draw to. Okay, as I said, these areas are like magnet to price. They are like magnet to price. Okay. Oh, sorry. They are like magnet to price. Where is the magnet? Oops. Well, you can also put this thing there. Okay, so it's a point of interest, an area you are looking at for price to come for a reaction. Okay, so after we break structure like this and we form this swing low, you can look for buys on a lower time frame to here. After it gets here, you can also look for sales from on a lower time frame to break this low. Okay, that's it. Watch out for subsequent lessons. Thank you, guys.